Good afternoon, I should say morning to each and every one of you. Welcome to the game plan. My name is Gareth Soloway, Chief Market Strategist here at verifiedinvesting.com. All right, you can see I'm already looking across the board at my different screens set up in my hotel room here to see what the heck is going on today, because today is a big day, folks. We have the Federal Reserve FOMC policy rate decision at 2 o'clock. At 2:30, we are going to get Jerome Powell's live press conference. Now, let's not kid ourselves. There's going to be no change in rates based on the Fed Watch tool. It's showing us that there's basically no chance, maybe 1% chance of something surprising, but that essentially means nothing will happen. But the kicker is the markets will react to whatever they say. So their guidance, essentially their forward guidance on rates, on inflation, on the economy, that is what's going to be pivotal in terms of the market. All right. So again, we're going to kind of keep an eye on that. I will be updating later today, as will Drew in trading the close with Lawton. All right. So let's get into the pre-market action here. Let's cover. There's a lot of charts to go over today. This is the SPY, which is the S&P tracking ETF. What it does is it shows us the after hours. This was yesterday's close. We had a great rally yesterday, kind of a bounce back up. Yesterday after the close till 8 p.m. Eastern time, markets went sideways. This morning at 4 o'clock when the SPY started trading, it was up a little bit. It has since faded and come down and is slightly negative on the morning session. But listen, all in all, is this a big move? No. Why? Because no one really is going to do anything. At least the big institutions are not putting massive money one way or the other on the market until we hear from the Federal Reserve. In addition, keep in mind, guys, you know what we have? We have Meta earnings, we have Tesla earnings, and we have Microsoft earnings that'll be coming out after the bell. So this is a wild period. So starting today, Fed decision, then mega cap earnings today. Then tomorrow after the close, we also have Apple earnings, I believe, are being reported. That's going to be big. And then also on Friday, the PCE inflation data. So again, lots of big things. Now, my guess is the Federal Reserve will already know the PCE data, so we can read into what they say on inflation to probably give us an idea or an edge on that PCE data on Friday. All right, the SPY, here it is, folks. We had the double top with no confirmation, classic rejection with a major downside move on Tuesday right there, folks. So again, big drop there. Excuse me, that was on Monday. Then on Tuesday, we had the snapback here. There's going to be major resistance here on the spiders at 608. That's going to be a gap fill. And then right above that, you have resistance here. Now let's look at both sides of the coin, right? So we want to look at the upside and the downside, the bulls and the bears. Which angle do we want to angle first? Let's first go with the bearish side, and then we'll flip over to the bullish side and talk about what could happen if we break up. So first off, this is going to be epic resistance. This was major technical damage, especially on the semiconductors individually, like an NVDA. And yes, we've bounced, but that's the buy the dip mentality coming in. The idea here is as long as you remain below this area here and don't confirm a breakout above this double top, the bias technically based on pure probability is to the downside. Okay, so again, how much downside? We don't really know. But again, right now, the probability favors the downside. Now, if on the bullish side, if we get above this area here, you have this yellow upsloping line and the double top right here. If we confirm above this zone right here, then you start talking about two upside targets, one being this first line right here. This would be a minor resistance, pivot high to pivot high right to here. That's around 625. And then after that, if we continued up, you'd go to about 640, 639 on the SPY. All right. So again, always important. Always remember that, folks, is that it's not just about saying, oh, well, I want the markets to go up, so I'm only going to look at that angle, right? Or oh, I'm short, so I'm only going to look at the downside. A good trader and investor looks logically at both sides and comes up with a probability, but also, and this is important, folks, also knows where the probabilities change. Because if you're someone who's just going to be like, oh, well, the probabilities are to the downside, so I'm going to go short. And then let's say the probabilities change, but you're like, no, I'm short, so I'm going to just believe that the markets are going to go down no matter what. You're really doing yourself a disservice as an investor. You have to be okay with change, and you have to be able to adapt. And so again, whether that's maneuvering, whether it's flipping positions, whether it's stopping out, those are all things that are very, very useful for us as investors and really key tools in our tool belt to make sure that we stay as profitable as possible. Okay. Quickly onto the QQQ here, the NASDAQ 100. This one had a bounce yesterday, albeit maybe not quite as big. You can see again, it still has a ways to go to get back to gap fill. The technical damage again on names like NVIDIA, when it loses, when a stock loses $500 billion, that's really tough. I mean, that did a lot of damage. All these people that bought from here all the way up, they just got wiped out on the gap down on Monday, right? So incredible. Now, yes, it's bouncing back or bounced back yesterday, but again, as it goes up, and this is the psychology of investing, that there are all these people that bought in here so they were all shocked and like panicking, right? So think about the psychology of that. Imagine you bought your first investment and you bought at 140.5 right here, and then 2 days 3 days later the stock's down at 124, goes to 116. You're kind of saying, oh my gosh, this is crazy. I want to get the heck out, but I don't want to take a loss. So I'm going to try to get the price back to break even. So what's going to end up happening is as it goes up, if it goes up and it hits different places where people bought, they're going to say, oh my goodness, I'm back to break even, cut, sell, sell, sell. That's why these type of drops create so much damage, because of the psychological damage they do to buyers in this period. Right. And again, this is into the psychology of investing, which is a major component of a good quality investor or trader, that they understand that psychology. Because number one, they can keep themselves away from falling into these traps, but also because they can understand what others will most likely do. Because let's be honest, all these candles, it's all psychology. It's all greed and fear, greed and fear, greed and fear, greed and fear, right? Especially here, fear was huge. And that's going to trigger a lot of selling on the way back up if NVIDIA goes there. Now, looking at the chart of NVIDIA today, it was up pre-market, trading near 130. It has faded to about 125.80 currently, so it is coming back in. Is there a day tradable level here today? The only level I'm looking at for a day trade may be in the Apex Live day trading room. I think 122.70 right here, this little pivot, there's an area right here. Aside from that, needless to say, double bottom down here, and there's that 116 support would be that big, big level. But, in all fairness, it's very unlikely that NVIDIA dumps that much going into the Fed decision, maybe after if the markets crater. But remember, markets could also rally on the back of the Fed. All right, so that's where we have there. Let's quickly go to the US dollar, just because the Fed decision today is instrumental. I was gaming this out in my member video this morning in Smart Money Stocks and ETFs. Could this be the beginnings of a head and shoulder pattern on the US dollar? And granted, we don't know yet, but I wanted to draw it in so you guys are keeping an eye on it. This would be a shoulder. This would be the head. And then could this be the up move? So maybe we rally in the dollar on the Fed here a little bit higher and then come back in. And again, you can see right here, there's a shoulder, head, and shoulder. So listen, we need to go up a little bit and then curl back down. But if that were to break, right, if that were to break, you could then do a measurement here where, again, if we do our measurement tool of how to calculate the target of a head and shoulder break, you basically take that and then you do it to the drop point, and it brings us right down to this mid-level trend line right here as a target. So listen, I'm going like 10 steps ahead here, but I think educationally it's important for us all to kind of just keep our eyes open. The idea is that as patterns begin to form, our eye gets so good that it can pick these things up and ultimately give us an edge, right? And again, we always want to be on the cutting edge of the possibilities, not necessarily reacting until it happens, but at least be aware so you're not caught flat-footed. The US 10-year yield is right above support. Could we dip into this, maybe causing the market to pop in the afternoon session off the Fed? But then the question is, if that happens, do yields then bounce off of this line, and then the market would start to sell off, right? The idea is that yields going up tends to make the market sell off right now. Yields coming down makes the market technically bounce, except for Monday, when we had the semis just by themselves. And remember, on Monday, the NASDAQ was down 3%, but the Dow was up 300 points. So it was very specific to the semiconductors and the SMH. And speaking of the SMH, it has not regained this bear flag pattern yet. It has not gotten back in there. It is still below, albeit unconfirmed. It has not confirmed the breakdown yet, but it is still open to confirming. All right, let's go to some stocks here in motion today. There were some earnings here. Yesterday after the bell, Starbucks put in a basically put in a weird kind of pop initially, then it dropped on earnings, and then it came back up here. I had done annotation. If you follow the financial news on the website Verified Investing, guys, I literally posted this chart yesterday, and I said, guys, huge resistance 102 to 103 right up here, and then the support would be down here. And if you look at this, basically what I was saying is that there's somewhat limited upside on Starbucks. Part of the issue is it's already had a massive run, and also these two trend lines, right? You have this high pivot to here, this high pivot to here, and both of those levels are right there. And if we look at the pre-market action, it's right in that range. It's trading at 103.30. The high end was 103 right here. So it's right in that range of kind of capping the upside. But still, again, it is up. FFIV reported earnings yesterday after the bell. The stock is trading higher. This will be an interesting one, right? Because you have a lot of resistance that we're currently above. Now, this is a much smaller stock. This is only about a $15 billion market cap, but it is trading above this area here, which is around 296. Right now, it's trading at like 312. So I'm very curious, and as a day trader, I'm going to be watching once this opens. Does it push up maybe to 320? Or does it start to pull back? And again, I'm going to be eyeing a short. If it were to push up to 320, I'd be somewhat interested in a short on this. This again for me will be one where I do a very small position because it is a smaller stock. It has a tendency smaller stocks, $15 billion, for instance, versus an NVIDIA. The $15 billion stock could squeeze a lot higher. All right, other stocks reporting this morning. We had T-Mobile. T-Mobile's making a big move here in the pre-market. This is getting my attention. It is off of the highs just a little bit, but the stock, I think, is up about 8% here pre-market. If we look at the daily chart, look at this. So it was hugging this line here, which happens to be parallel to this, which is a double top right up here. So again, I'm eyeing this zone here, 248 to 250. If it gets there, that should be epic resistance. By the way you know a parallel is good is if it lines up here, and then you can see low pivots here, right through this, even this little high. But then you can always drag it out, and look at this. Look at that. High pivot, high pivot, high pivot, high pivot right there. So a parallel oftentimes will have multiple parallels within the parallel, right? So this would be the big parallel, and then you can drag it down and say, oh yeah, but look, even right here, right? I mean, right to these little inside areas right through this, and then we drag it down even more and we say, wow, right into here, and then so on and so forth. But the idea is that really for me, 248 to 250s, low 250s starts to get me interested on probably a swing short too. I actually had this trade with members of Smart Money. We took profits on the downside here on the short, and now if it pushes up into this range here, I would definitely look to re-short that. All right, let's take a look at a couple of these other earnings announcements from this morning. But remember, it's all about the after hours, guys. All right, so another big report that came out this morning is ASML. This is a chip stock in Europe. The stock initially opened sharply higher in the pre-market, around 750. It has faded to about 725. So it makes it tough to trade. I like to trade when stuff is at highs, right? So if it was at back here, I'd be looking and say, okay, well, where if it continues up? Here, it just has to get back to the pre-market highs, it has to go up $25, right? So I don't even know if this is tradable, if it'll give us that opportunity. But nonetheless, if we look at the chart was at the lower end of the range down here. This one has suffered from weak earnings in the past. There was a pretty interesting trend line here, which made it very unlikely it would sell off very much because you had so much support right down here. But again, it is bouncing today, but just not enough. I mean, really, this high here would probably be my first level, and it's still way higher. I mean, literally like $60 higher at around 783. That would be first major resistance. PGR, which is progressive. PGR is progressive here. And again, you can see initially it bounced up and is now coming in. Look at how thin that volume is. Just a note on TradingView, if you see these lines here, a lot of these lines, it means there's almost no volume. That was like a share or 50 shares traded, and that's over a course of 10 minutes. This is a 10-minute chart. So it just tells you how thin it is pre-market when you don't have much action. ADP reported. This one also very thin pre-market, not doing much. And by the way, I'm walking you guys through what I do in the pre-market to kind of prep myself for the trading for the day, right? I just literally go through, okay, what had earnings? What's the big movers here? What could be in play? And so I'm just going through it with you guys now. GD, General Dynamics, reported earnings. That stock's not a big enough move. Anything that isn't up or down significantly, I throw right out. I don't waste time. As a trader, you have limited time anyways. So you want to find stocks making bigger moves. Teva Pharmaceuticals here. This one is dumping. This is a decent little drop here. So again, we'll keep an eye on this one. This is down trading around $19. So if we look at this here, we can see that, let's go down here. So 19 is actually a little bit of support. I don't think I'll play it. But again, look at this. Look at this beautiful trend line. Low, or I should say high to high pivot to low pivot. So again, should we be surprised at pre-market? Look at that right there, and it's getting a small bounce. Now, again, for me, I'm probably going to look for it to go through that and flush, but I would say around 1830 or so starts to get me interested. This little high pivot all the way down to 1790, right in this vicinity, that would be extremely overdone to the downside, coming in, piercing first support into second support. And then needless to say, you have some other lines here that if we drag out here, we have this trend line right here coming into play. And this is where you start to get into major support. So suffice it to say, what you're looking for, at least what I look for as a day trader, is that I like to have this support, but then I like seeing that just not that much lower, there's multiple major levels. So what this does for me is say, okay, this one's okay. You know, this would be a high risk level. It might work. It might not work. One or the other. Maybe it favors it slightly, 55, 40 to 45% chance of a bounce. But this here, starter position and add for a bigger bounce right in this vicinity. All right. Corning reported this morning, GLW. This one is up a little bit. Let's see. It closed at 51. It's trading at 54. That's okay. It's not a huge move and the volume's not heavy, but let's take a look at the daily chart here. If we take a look here real quick, we can see there's a gap fill at 54, which is right where it's back to. The stock's been trending higher for quite some time. I don't see anything on this chart at this point. I mean, we could use something like this, but this is way, 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 way higher. But this would probably, I mean, if this, actually, it's not that much higher. Now that I look at this, this might be the level where you get interested. This would be near $59 to $60 right here. Longer term trend line right there. All right, couple other stocks just to quickly breeze through here in the pre-market. Danaher, let's take a look at that one. And Danaher is taking a little bit of a beating. Yesterday it closed, looks like it closed around 248, trading at 234. Not a huge move on Danaher, but let's take a look at the chart. It's an old trend line there. I would say 226 double bottom right down here. That would be the first one that I would catch my eye right there. There might be a little bit of an upsloping trend line there too, but it's all in the same range. So you look at your lows, you connect your lows. So maybe starting around 230 down to about 225. That would be a significant amount of support. And this, just to go over again, is trading at 234 pre-market right down here. All right, and last one that I'll just go over here is VF Corp. VFC is the symbol on this one, and this one is fractionally higher, but not a big enough move to get me excited. All right, let's flip back to the daily chart and get into our Bitcoin analysis. Now, Bitcoin is barely moving today, just like gold. Mainly why? Because everyone's waiting on the Federal Reserve. So it's all about the Fed today. I wouldn't expect a big move on Bitcoin one way or the other until we get that news out from the Fed this afternoon at 2 p.m. Eastern time. Then you might get a big pop. But remember, this is our pivot line. This is like the mountaintop. So when you're on this side of the mountain, the water runs this way, or runs this way, I should say. If you're on this side of the mountain, the tendency is for the water to run this way. As long as we stay below this, it's probability slightly favored downside to 92. If we were to close back above, you have upside from 108 to 111, these two trend lines here. So it's not a lot of upside until it meets major resistance if we were to get that move there. Okay, gold real quick here. Let's take a look at gold on the charts. If I could just get my fingers on the right keypad, that would be great. There we go. Gold again, no movement. Again, if it pulls back on the Fed, support is going to be 27.20. If it rallies up, resistance double top at 27.90. I continue to favor gold overall in the mid to longer term, just based on, you know, all the ever changing and continued catastrophic potentials of debt and geopolitical issues and tariffs and all these other things. Again, for me, it's a no-brainer that if your outlook is more than 6 or 12 months, gold, I'd be very surprised, put it to you that way, if by year end we're not above 3,000. Silver real quick, just take a look. I continue to be slightly bullish on silver. Again, it still has confirmed. The longer it trades sideways, the more I like it, in fact, for a potential breakout to the upside. It's showing us that it's holding support right here, which is a confirmed level. The only thing, like I said yesterday, is if we were to close below and confirm below the white and the orange lines here, then that would be, okay, now it's going down sharply. But as long as it stays up in this range here, of the path of least resistance is up. And again, I am getting slightly more bullish on silver here based on the price action. And by the way, that shows you, like a few days ago, I wasn't so bullish on it, right? If you go back to a week ago, for instance, I was like, okay, confirmed, but it's lagging gold, and it still is lagging. But the bullish consolidation allows my probabilities to kind of adjust, which is what you want to be as a trader. You want to allow those kind of things to adjust. Oil today, again, let's take a look. It is coming back in. This is going to be where I unload my next my second half of my SCO. SCO again is a 2x ETF short oil. So again, if we come down here, this is where it is. I've already unloaded half the position, but if it comes here, this would be my second half unload. Remember, these are swing trades. In the bigger picture, I still think oil goes a decent amount lower. In the case of a recession, oil's going down to 35 per the charts. Granted, we don't have a recession yet. The question is if and when. I guess it's more of a matter of when that recession will hit. Lastly, natural gas here, folks. If we take a look at nat gas and we zoom in, bear with me as we zoom in here. Small bounce on nat gas after our river theory broke support. And again, 2 down days in a row and a small bounce here. There will be technical support here on it, but that's not a buy. For me, it's too high risk. This one, if it went straight down into this 260, 265 area here, that would be the level that I'd say, okay, now this is maybe an opportunity to go long. Right now, it's just, it's not this thing is too volatile, right? They call it the widowmaker for a reason, because it makes so many people go broke because they try to game it with 2 small moves with not enough factors in one direction. All right, so listen, when all is said and done, what do we have? We have the Federal Reserve at 2 p.m. today. That's the statement. No change in interest rates is expected. We then are expecting a commentary that will be released at that time from the Fed that'll make the markets move a little bit. Are they going to price in more hikes, less hikes? We're going to see. And then the press conference with Jerome Powell will be the next thing at 2:30. After the bell today, Microsoft, Meta, and Tesla. Tesla reports, IBM reports. There's a bunch of big reports. Those are mega caps. IBM's not such a mega cap, but the other 3 are trillion-dollar stocks. Those will be hugely influential in tomorrow's price action, hopefully giving us a lot of great trade setups. On that note, guys, I got to get to the trading room, the live Apex Day trading room. Thank you guys so much for tuning in. You guys are always rock stars. I love the comments, everything. You guys really swell my heart, make me want to just do my best for you guys, and I do appreciate that so much. So thank you. Have a wonderful day. And thank you for supporting verifiedinvesting.com. Thank you again, guys. Take care.